I always like to start these things with a quote, and today I have wealth is not about having a lot of money, it's about having a lot of options. Chris Rock. And I think today's guest will have a lot of things to cover out around that topic, specifically in the crypto space. So, Brian Nibley is a copywriter, author, and investor who has been covering the Bitcoin and cryptocurrency space since 2017. His work has appeared in publications such as MSN Money, Blockworks, Business Insider, Cointelegraph, and Newsweek. Brian, how are you today?
Great, thanks. Thanks for having me.
Fantastic. Now, before we continue, I do want to cover the basics that we're not financial advisors. We're not giving financial advice. This is for informational purpose only and should not be considered as legal advice. Cryptocurrency investments involve significant risks and the potential loss of capital. So we're not responsible for any losses, damages, or liability that may arise from listening to this podcast. Now, we always have to cover these things because I think cryptocurrency has a lot of unknowns, and hopefully today we'll cover some of those things. Now, before we go into that, can you tell me a little bit more about your journey? How did that start, and how did you get involved into the crypto space, and how you got to be where you are today?
Yeah, sure. So it started back in 2013 for me, a guy named Max Keiser. I heard him talking about this new cryptographic currency basically that was all digital and that had to be mined into existence. It couldn't just be created, couldn't be double spent, and that there was a finite supply cap. And that was the only real thing I took away from that. And basically from that moment on, I was just obsessed with trying to learn more and figure it out. I know I spent the next 2 weeks spending every moment I could just trying to figure out how it worked and what the implications were going to be and all this. So then in 20 years later in 2017, I found myself into my way into the copywriting business, and pretty quickly after that found the Bitcoin and crypto niche, and it wound up being a perfect fit at the perfect time because things were just starting to go mainstream for the first time. And yeah, just been a journey ever since then of both in the kind of finance sphere and in the marketing sphere. Lots come together since then.
Right. And particularly your journey moved not just being, an investor when it comes to Bitcoin and crypto, but you also do a lot of the content creation, a lot of writing. Like you said, you would feature the MSN Money, Business Insider, and all these places. What are what are the usual topics that people come to you and ask you to write about when it comes to Bitcoin and crypto?
Yeah, so there's a wide variety. There's a lot of beginner-oriented content of just what is a blockchain, what is distributed ledger technology, what is a crypto wallet, what is proof of stake. There's a lot of things like that. There's also more technical things like white papers that talk about, say, data centers that incorporate Bitcoin mining and run on renewable energy and talk about all of the electrical engineering aspects and things of that nature. And then there's things on crypto scams. There's finance stuff more generally, in terms of, asset allocation, how to construct a portfolio for different risk profiles, people at different points in their life and different risk tolerances. So there's a pretty wide range that covers everything on the technology side and everything on the finance side and everything in between.
Wow. It's a huge spectrum, and I would assume I think a lot of people would kind of focus on just like either the technology side or the financial, but you're covering a wide spectrum now. If someone heard of it, because I think it's impossible not to know about it, you've heard of it. What are the first and most common applications that people use Bitcoin and crypto?
The most common today, it's the store of value case. I'll just speak to Bitcoin first because they're two distinct categories, Bitcoin and crypto. The most appealing use case for Bitcoin today is as a store of value because over time, especially the last 5 to 10 years, as central banks, governments around the world have printed trillions and trillions of new fiat currency units, the price of everything has gone up against that. Any asset class you can imagine has skyrocketed, especially just the last 2 or 3 years, as we've seen, we all know at this point. Any asset or commodity that you need or want is a lot more expensive than it used to be. However, denominated in Bitcoin, things have actually gotten a lot cheaper because it's serving one of its intended functions as a store of value, one of the three main functions money has to serve, which is store of value, medium of exchange, unit of account. And people pricing things in Bitcoin have seen the prices go down because the value has risen against all other assets. It's not just any one currency like the dollar. It's not any one asset like oil or gold, but against everything, Bitcoin has appreciated. In, at least that's how it seems, but in reality, it's that everything else has depreciated against the one and only truly scarce finite asset in the world, in fact, in human history. And so it's not so much that the price of Bitcoin is going up, although that can be when there's a flood of new capital suddenly. But overall, in the big picture, it's that the price of everything else is going down relative to that one and only finite asset. But there's also the borderless transaction benefit in terms of people who are unbanked. This is kind of store value and medium of exchange. But I think the World Bank estimates, I just wrote about this recently, there's about 1.4 billion people in the world who are completely unbanked, meaning they have no bank account, no access to traditional financial services like borrowing and lending, credit cards, most of the stuff that we take for granted in first world countries. There's about 1.4 billion people. So we're talking close to 20% of the world's population is completely unbanked. And there's another billion something that are underbanked, meaning they may have some access, but not full access. And so anyone in that situation, all they need is a digital wallet that could be on a smartphone, could be on a laptop, could be on a separate hardware device, and an internet connection. And they now have access to a range of financial services, at least the ability to send and receive funds to anyone, anywhere else in the world, without needing permission from anyone else. Uh, it settles almost instantly. The fees tend to be very low, although that does fluctuate. And on the base layer, at least, there's other scaling solutions we could talk about later that have faster and cheaper payments. And it's a censorship resistance type of transaction because there's no central authority approving the transactions. It's just consensus achieved by various independent node runners all around the world. And so you can send money to anyone in the world at any time. You can own your own money in an unconfiscatable way, meaning no one can take it from you, whereas your money in the bank is not technically yours. It's technically property of the bank and they can do what they want with it. And if something goes wrong on their end, they don't necessarily have to give it back to you. And the same is true to various degrees for any other asset, like your house, for example. You may own it more or less, but if the government comes in and says your property tax was going up by 50% this year and every year for the next 10 years, what are you going to do? You have to pay that tax. Whereas the monetary system of Bitcoin is engraved in code, and proposing any changes to it takes a very long time because all the or a great portion of the tens of thousands of independent node operators around the world have to agree that this is a mutually beneficial change to the code and that they want to implement it. So, yeah, I'm starting to rant now, a ramble. I could go on, but I think I answered your question at some point along the way there.
Yes, you did, and what I noticed right off the bat, which I'm guilty of it. I always kind of call it just crypto and kind of mushed everything together. But the way that you were explaining it right off the bat, you said there's crypto and then there is Bitcoin. You made a clear differentiating factor, and you continue to talk about and speak more about Bitcoin. Can you tell me before we go back to that, what is the main difference between cryptocurrencies and Bitcoin? Because you made a clear distinguishing there.
Right. So basically that all the other tokens have some, but not all of the characteristics I just described. They may they may enable borderless censorship resistant transactions and could serve as some kind of store of value, but it's less stable, less reliable than Bitcoin because none of them have a fixed supply like Bitcoin. Or I take it back, there's a few that do have a fixed supply, but the way they were created was different, where they all have a centralized creator. A lot of it comes down to that. It's a complicated topic, but a lot of it comes down to the fact that Bitcoin had this immaculate conception where the Genesis block was mined. These million coins were created immediately, and they've never moved. No one knows who Satoshi was for sure. There's some speculation. There's a few different candidates people think it might be, but no one knows for sure. And this person has not come forward because they either know it would be bad for the network or because they're no longer with us. That's my theory, at least. And all the other coins were created by a central one person. There's a person behind them, like whether that person calls himself a CEO or not, that's essentially what they are. That creates a single point of failure because if any national government were to come in and say, hey, we want to limit this thing, we don't like it, we need to place restrictions on it or get rid of it, they can just go to that one person and tell them to have influence over the network, over the people underneath them, all that. And whereas Bitcoin doesn't have any centralized person or team behind it in that sense, other than the Bitcoin core developers. And then there's the issue of how the tokens were created in the first place, whereas there's often a pre-mine where insiders and venture capitalists get a certain amount of the coins before they're even available to the public, and then they wind up dumping on the public. There's the fact that there's been well over 20,000 attempts at recreating Bitcoin or outperforming Bitcoin in some way. None of them have worked so far. In terms of proof of work coins, none of them have captured even 2% of Bitcoin's market share in terms of the hash rate, which is the computing power backing the network. And they're always trying to, innovate in one way or another and be the uh, next bigger, better thing. And it's great from a technology perspective to experiment with all these things, but from a decentralization and financial perspective, it's a little bit sketchy because the incentives get misaligned more or less. When you have people at the helm of anything like this, there's always conflicts of interest and things that go wrong. Whereas with Bitcoin, again, there's no central person or team at the helm guiding things. And one thing I want to say is that in his book, The Bitcoin Standard, Dr. Seyfuddin Amous, a professor of economics, talks about how Ethereum, the second largest uh, crypto by market cap, and it's been that way for many years, had a hard fork in 2016, I believe it was, when they had this DAO, decentralized autonomous organization, that had a flaw in its code that allowed an attacker to, the flaw was for people being able to take their funds out of this thing.
Hmm.
And an attacker was able to exploit that by sending some funds in and then tricking this smart contract to think that it could withdraw again and again and again. So they withdrew millions of dollars in a day, and the thing was about to fall apart. And so a decision was made to just roll back the blockchain. And they could do this because there's one or a few people that essentially have control over the whole thing, even though people will argue otherwise and it may look differently. But this is what happened. They just rolled back the blockchain to the point before the hack happened and then did a hard fork, creating a new chain. And that new chain is what we know today as Ethereum. The original chain that has the hack in its history is now called Ethereum Classic or ETC. So, and a lot of people don't even know that that happened these days.
No.
But the point that he makes in his book is that if that can happen to the second largest crypto in the world, then it's hard to make a case for any of the others being decentralized. And we also don't know uh, what could happen with them in the same way. And one last thing is that 70% of the nodes for Ethereum are hosted on third-party cloud hosting services like Infura and Amazon Web Services. So that's a major central point of failure. If Amazon came out one day and said, actually, we don't like Ethereum, we're going to kick all its nodes off our servers, the majority of the network would just go poof, just like that. So there's a lot of issues.
So it feels like Bitcoin is truly decentralized, and it happened because it wasn't by design. It happened when they were mining in the beginning, and that's how it was created. And the guy that kind of created never came forward, so no one can go to that person and do something with that happened with the Ethereum where they roll back the chain. So it's truly decentralized, where any other cryptocurrency is close to that, but there's multiple points of failure that you could exploit or you could find that it happened to the second largest one when they rolled back the chain.
Pretty much, yeah. There's a spectrum. I mean, some are
Yeah.
more centralized than others. Some have bigger pre-mines where more of the tokens went to insiders than others. And there's all kinds of arguments for and against any one of these points that you can imagine. But this is my understanding, my take on it after, 11 years of studying this stuff and watching everything that's happened in the market and on the tech side.
Wow. So it's been people still do it that way because they feel they have like strong arguments about not having everything 100% decentralized or replicating or coming close to Bitcoin. They try to be different and they have good arguments behind it basically. But in this whole kind of process and space, we have a clear differentiation now between Bitcoin and crypto. A topic that is no longer popular, and we can just touch upon it like briefly, which is the NFT space. It was really popular. What I understand, it was I think it was a version of Ethereum or on ETH, and that is no longer the conversation. It hasn't been a major conversation for a long time. Can you tell us what is the status of NFTs nowadays?
Yeah, so NFTs were originally created on Ethereum. It's called an ERC-721 token standard, which is just a type of token you could create with a smart contract on Ethereum that only has one possible type of itself, basically. So non-fungible, meaning it cannot be recreated in that same exact way on the same blockchain. There's then other blockchains that also have NFTs that do the same thing more or less, but it actually started in 2018 with a game called CryptoKitties. I remember writing about it at the time. It was just these little digital images of cats, and you could take two of them and breed them to create a new cat that had some random variation of the same features as those two. And it was a really big hit, but it didn't last long because it clogged up the network. Things got really slow and expensive. And then it died out for a few years, and it wasn't until I think 2020, 21 that now NFTs came back in a big way, using that same token standard, but with these big marketplaces like OpenSea, for example, where now people were minting, creating, and trading and selling their own NFTs in mass at scale. And the thing about that was that, it's another thing that sounds cool and interesting at first, but really there's no transfer of ownership. There's no legitimate copyright law involved. Although I think there was one case where a basketball player won a case against his basketball card NFTs being counterfeited or something like that. And then there was one with the monkeys, the Bored Ape Yacht
Yeah.
Club, some legal developments there. I haven't kept track with everything, but more or less it was a just speculative art marketplace that tanked massively, and there was no there was not real copyright value. Again, people kind of assume that, hey, since there's this one marker on the blockchain, I can prove I own this picture. And a judge, I actually had someone, a very intelligent person on a team I was working with at that time, say, hey, these things are a big deal because I can put it on whatever blockchain and go tell a judge, say, hey, look, I have this thing on the blockchain. And I was thinking, really, you think the judge is even going to know what that means and that he's going to care that they're going to like, they're just, oh, okay, I guess you own this thing then. When in reality, anyone could just take a screenshot of that same image and now they have the same thing and they can change two little pixels and then argue that, oh, actually, it's not the same because I changed this one thing. That if anyone were to actually care and try to get legal about it. And so, yeah, it's the only interesting potential use case with NFTs, in my opinion, was always video game economies. Like if you had
Right.
a purely virtual economy inside a virtual world, perhaps there would be a way to tie some real world monetary value to in-game items in that way that would be, not recreatable, and some use case there in theory, perhaps.
Right. Now, it sounds like there was a very interesting thing about NFTs, but there was obviously a flaw from the beginning. I think everybody was talking about that. When I can just, it's a JPEG. I can just screenshot it. Like, and it was still building up hype. I think people had like a lot of unknowns. They were like, are people still, investing heavily and trying all these things around the NFTs? And then it got to the point where obviously that was very clear. Like you can't really do copywriting, transferring ownership is very difficult, and all those things. Now, what I would put as a third bucket for a majority of people when we're looking at this, because we now have a clear idea of how you explain it. Bitcoin is very different. Don't mix it up with the other stuff. NFT, it was a thing, and now probably not, maybe applicable in video games with some real life kind of monetary stuff, maybe. And then the third one that I would like to cover is meme coins. And I think Dodge was the first one that really was like, um, it's a meme coin, but now it's really popular. Where before, like it was very clear, like those are just like, meme coins. Can you walk us through what is first like a meme coin, and then go into um, why they're popular, why they're still being in use?
So meme coins are just tokens based on off a meme that have no particular use case or utility value. They don't even try to pretend that they're doing something, bigger and better than Bitcoin or something unique and valuable. It's literally purely a speculative token that does nothing other than exists on a blockchain, can be transferred from one person to another, bought and sold. And that's it. That's the only thing you can do with it. Dogecoin was the original. I think it was created back in 2014 and it was done as a joke. And there's no limit to how many Doge can be created. There's 10,000 coins mined every 10 minutes. And that's never going to change, at least as the code is today. And it's never changed and probably never will. So there's constantly a lot of new supply coming on. So the price is always supply and demand. The prices over time is bound to trend downward because unless you have constant new capital coming in over and over again, because people will just mine. If the price goes up, people will just mine more, and then they'll sell it, and causing prices to go down. Similar to precious metals like silver and gold, it's a very, very similar thing, even though it's a lot harder to mine those than it is to mine Dogecoin. Still a similar concept there. And so different meme coins have different monetary models and memes behind them. And in a sense, it's really just a way to launch a scam token sometimes because you can say, I mean, back 9, 10 years ago, there was a lot of tokens that had no utility value that were launched, and the term meme coin was not really a thing in anyone's mind yet.
Mhm.
So now you kind of have a way to escape some liability to a degree, I guess, by just saying, "Oh, hey, I launched this thing as a meme coin, and so I'm being honest with you and saying that I'm not making any promises here. It's just this meme that's now been put into a token and don't, don't worry about it. It's going to be totally fine. And so it's a term that has meaning, but also doesn't in a way, if that makes sense.
Okay. And I think maybe we'll cover like a fourth bucket, and then I want to talk a little bit more about the Bitcoin stuff. The fourth bucket, I would say, is these partnerships with celebrities that always end up in what is called a rug pull, pump and dump, and maybe can cover in that space kind of the what are those terminologies? What is the rug pull? What is a pump and dump? How does that work? And why do we keep seeing celebrities that fall on the partner somehow or launch these things that end up costing their fans millions of dollars? Million, and the most popular one that is, I think, the last couple of days is the Hawk Tuah girl, but Logan Paul was the most popular, the biggest one that everybody talked in was I would say like focused on it, kind of brought it to light. So rug pulls, pump and dump, and how are these celebrities always partnering and ending up in, costing their fans millions and millions of dollars?
And going back to one of your first questions, these are also types of things that people ask me to write about sometimes. So a rug pull is basically when you have a plan from the very beginning to pull the rug out from underneath someone or many people who have bought into this thing, and then you just suck the liquidity out of the thing. There's various different ways to go about it for different scam use cases, whether it's a DeFi protocol or some type of token launch and various other things. But basically, you create the thing from the get-go with the intention of just pulling the rug out from underneath it and causing everyone to lose money, and you make off with the profits and then disappear more or less is usually how it works. And for a pump and up, it's when you create hype around a token, you continually or any asset really, it happens in penny stocks a lot as well, where a person or group will create a lot of hype around some new investment product, and that leads to some speculation. The price starts rising rapidly, and then meanwhile, the people who are causing the hype already have a lot of shares or tokens, and so they're just waiting for the price to pump to unsustainable levels, and then they start dumping on the unsuspecting public. And so that works best in markets with thin liquidity, like penny stocks, for example, like smaller market cap uh, cryptos, because it doesn't take as much volume to create upward price pressure, and that's usually one of the only ways it's going to happen quickly. So then insiders can dump their shares. So there's a different way. Uh, the way they work is different, but they're very similar in the sense that they just involve someone with a plan behind the scenes from the get-go, planning to just steal money from people.
And now that we understand like the rug pull and the pump and all, these are terms that are usually heard and used when you would see something like, again, a celebrity launching a coin. Hey guys, I got this coin, and then within a couple of let's say, I don't know, depending on the timeline, usually people start to say this is a rug pull, this is a pump and dump, and then the value of that coin or token, you can see some trending all the way to like pennies, basically losing 99% or 90% of the value. And we see it time and time and again. Can you shed some light on how does that work in the sense of why do the celebrity agrees, because they probably don't know how the whole thing works. They have to partner with someone, I'm assuming. How does that work? They start this partnership and they have this thing going on, and then it ends in a rug pull.
Let me start by saying really quick that all altcoins trend towards zero against Bitcoin on the long term, on a multi-term, multi-year time frame. And so they almost all of them lose 90 to 99% of their value when valued in Bitcoin terms. So in a sense, you could say, again, going back to earlier in the conversation, you could say that all altcoins are some variation of this scam. And so as far as why celebrities do this, I can't say for certain. It's sad that you keep seeing the same thing repeated over and over. I mean, they must not know the history of it, obviously. Or if they do know the history, they have someone very persuasive convincing them that this time is different and somehow we have it all figured out and it's not going to be like that. Or your celebrity is so much more powerful that it'll prevent this thing from happening. I mean, you can kind of imagine all the different rhetorical arguments someone could try to make as for why this is different. Or if somebody is unaware of the history of this stuff entirely, then it may not even take much convincing. You can just tell them, well, you can make a lot of money off this, and hey, your followers can make a lot of money too if they get in early, when in reality, the person saying these things is one of the developers or masterminds behind the whole thing, who fully intends on either having tokens for themselves from the very beginning and then dumping on the public, or having some other way of profiting from the scheme. Maybe it's transaction fees or taking some small cut of everything that happens on the network or something of that nature. And I know that I just saw a short clip. I didn't know anything about this until last night, actually, that meme token had launched. And I saw a clip of a Twitter space with everyone involved on there. And apparently, the creator of this token, when asked about transaction fees and why they were so high and who was getting a cut or how that worked, the creator of this token just pieced out and just left the space immediately. So
Yeah.
that may have played a role there too. But I really don't know how people get suckered into these things, and it's really kind of sad.
Now, we have a clear understanding of Bitcoin is different. This is crypto. Altcoins all eventually on a long scale, if you look at it that way, go towards zero. So take what you want from that information. And meme coins, people are usually honest from the get-go, no value, no nothing. Like it's just a meme, it's a coin, do what you want with that. I'm just honest with you. We understand the terms of the pump and dump and rug pull. What does that mean? It's preconceived. You designed it from the beginning, knowing that you will pull the rug on everybody that will be buying. So you dump all of it on them. Now, let's say someone is in this space because they have, like you said, all of the fantastic benefits that you were listing from Bitcoin. How did they start? They've never bought a Bitcoin. They have never they don't even know how and where to go. Walk us through the first baby steps. Hold our hand. Where do we go? Literally, websites. What do people do to start buying Bitcoin, because it is different from all the other stuff that we just talked about?
Right. Well, I would start with planning to learn a lot and just going on a brief educational journey. I say brief, it should really be between 10 to 100 hours probably, unless if you understand enough of it to be convinced where you want to use it as a savings technology in the least, then maybe you could start small dollar cost averaging buys on a mainstream exchange like Coinbase, Kraken, Binance, so on, any of the big most popular ones. But I always recommend Michael Saylor when it comes to any video content, because he's a very um, eloquent, concise speaker. He somehow explains these big, vast concepts in a condensed way that is somehow it's not lost. The bigger idea is not lost, even though he can talk about things that might take you hours to read about, and he can say that in 20 seconds, and it's described perfectly. So I recommend watching interviews with him. For a book, I would say The Bitcoin Standard, and that's really the big one. There may be a few other good ones out there too. I can't think of right now.
Mhm.
And then in terms of blogs and media, there's a ton of different influencers, different blogs and websites and media sites. CoinDesk, Cointelegraph, Blockworks, a few of the big ones. And you can follow me on social media, read some of my blogs on my website, for example, and read the Satoshi white paper. But basically, there's going to be a good deal of reading and research you're going to want to do. And then you can just get started on any of the mainstream centralized exchanges. It's not much more difficult than creating a bank account. Making transactions might be a little more complicated for people who are less tech savvy, but again, there's everything. All of the exchanges have a big learn section where they just have hundreds of articles on every different topic you could imagine. And then they have an FAQ section of all the frequently asked questions, which, oh, Bitcoin, the FAQ on bitcoin.org is also a really good place to start because they have in-depth answers to questions like, is Bitcoin a Ponzi scheme, or what happens when quantum computers get powerful enough? Will it crack Bitcoin? A lot of the most common objections that people might just kind of bring up to
Mhm.
discredit the whole thing. You have really good explanations there on that site. So then once you have the best way, again, I'm not a financial advisor. This is not investment advice, but uh, one of the most effective ways, and I wrote an article going into detail about this for Cointelegraph last year, that the best way is just dollar cost averaging. So have a set amount, whatever you can afford to set aside, $10 a week, a month, whatever. You can just have that on an automatic repeating buy. And then as the months and years go by, you will benefit when the price goes down. You'll get a larger amount of coins. And when the price goes up, you won't spend any more of your native fiat currency. And so it kind of balances out the volatility over time. And on a 3 or 4 year time span, anyone who's done that in the last 15 years has never lost so far. I mean, we're just hit recent new all-time highs in dollar terms for Bitcoin. Yesterday or the night before that, I think hit over 100,000 for the first time. So this is quite good timing for this podcast, really. And uh, but it also depends on your jurisdiction. Where you're at geographically
Mhm.
will influence some of the exchanges you can use, the services you have access to, because a lot of things have geofencing due to different regulations. A lot of the more newer, more exotic DeFi products and platforms and stuff are not available to users in the US,
Mhm.
and for example. And Bitcoin is measured against different currencies in the world, has had hit new all-time highs long before it did in dollar terms. So the last thing after having some on an exchange, you don't want to hold all of it on an exchange for too long. The best thing is to get yourself a device called a hardware wallet, which is usually between 50 to $100 US dollars or so. And what that is a separate device that's outside of your computer or smartphone. Typically connects to a laptop via USB, and it handles the signing of a transaction on that device. So it's much more secure because the actual mechanics of the transaction are not happening on your device. So it creates that virtual isolation in a sense of if anything on your device is compromised, it's not going to affect the signing device. And also, a big benefit is when you take that device offline, now that wallet balance and its private keys are held in what's called cold storage, meaning it's not connected to the internet, and there's really no way for a hacker to access it directly. And then, so once you've done that, and that's called self-custody, which is,
Mhm.
again, Bitcoin's the only asset you can do that with. You can fully take ownership into your own hands, and there's no way for someone to confiscate it from you unless you give them your private key or your backup seed phrase, something like that. And once you have some savings in that form, you can do things like use it as collateral for a loan. So there's a handful of different lenders out there. I won't name names, but there's centralized ones and there's decentralized ones where you can get liquidity in the form of dollars or stable coins. And that's a way to hold on to your Bitcoin without, without having to sell and pay the capital gains tax. And then you lose that hope for the future because people ask me what Bitcoin is to me, what it means, and I would say Michael Saylor says this too. He says it's hope. Hope.com is a website of his apparently, and it just has a bunch of Bitcoin educational materials on it. And it is hope for the future and a lifeline because I often tell people, I've gotten a handful of friends and family members into this now, and I usually tell them to see it as like a long-term savings account or emergency fund, not to really sell for fiat unless you absolutely have to, or there's extraordinary circumstances, some type of emergency, or you need a new car, you have to pay a medical bill, you're entering
Mhm.
retirement, things of that nature. And but using it as collateral for a loan is often a nice option because if you were to have done that this year or last year, for example, you would have benefited from both the price appreciation because you still have your assets, and you would have been able to access some liquidity from them at the same time. Whereas if you just sell, that's some hope for the future that is completely gone, and you don't have the hope of having the most scarce asset in human history that, in theory, can appreciate infinitely against the fiat currency that's controlled by a very, very small select group of people, and they keep printing it and creating it out of thin air to infinity. And there was previously no way to escape or shield yourself from that system prior to 2009.
Wow. I feel like that description you said hope that there is a different way that it's been working since 2009 and that we do see it in a very different way today um, is what Bitcoin is meaning for the future for you and for other people that are in this space. And I really like the way that you gave us the baby steps. This is what you want to do with it. Do that little whatever if you feel comfortable. If you feel $5, $10, one, whatever. It's a nice and simple way of how that potentially could work for you to understand it and to see it. And the most important advice I think that you gave us was really start with the research. It starts from the research. It starts from watching those videos and reading the people you've listed. Then you understand what you're doing with it. You're not just gonna go into blind, go into an exchange, type it in, and don't know what to do. And a very new thing that I didn't know was the physical wallet that you can, have a physical wallet. And now, let's say for the physical wallet, this was like a question that popped in my head. Does it have like power? Like, can it completely die? Like a hard disk can completely die and just be gone?
So there's some wallets that have their own battery that has to charge up. There are some that simply plug in to your computer and they take the power from that. If something were to happen to the device, like it were to get lost or stolen or damaged, you still have your private keys through what's called a backup seed phrase.
Mhm.
So it's a 12 or 24 uh, word long string of random words that contains within it a code to the private key, which is the thing that accesses your wallet and allows you to sign transactions. It's what allows you to prove to the network that you do, in fact, have ownership of the balances inside this wallet. And using that string of words, you can get a new wallet of the same kind. And when you set it up, instead of selecting create new wallet, you select restore from backup, you enter those words, and now you have everything just as it was before. And that's another one of the features, use cases of Bitcoin is that imagine you're in a war-torn country or you're a refugee for whatever reason, and you can't take anything with you. You have no physical means by which to take your gold, your cash, your house, all your physical property. Maybe your bank accounts have been confiscated or frozen, or the banks just became insolvent and went under, you lost all that. You can have a 12-word phrase in your mind that could be worth an unlimited sum of money, could be worth millions, billions of dollars, and you can take that with you anywhere in the world, and no one can take it from you unless you willingly give it to them. So you can go across borders anywhere and no one will know, and you can just get a new wallet and restore it. And these things are supposed to be universal in that you can use them for different multiple types of wallets. I've heard from some people though that it didn't work that way when they tried to. They had to use the same type of wallet. I'm not 100% educated myself on the exact logistics of how those seed phrases work and how they restore the private key and all that. It's a very technical,
Yeah.
complex subject, but it's very difficult. The way that encryption works is it would take hundreds or thousands of years for a computer to randomly guess the right combination of words to get to your private key. And so,
Absolutely, Brian. Thank you so much for your time. Wish you all the best, and yeah, we'll keep staying in touch.
thanks for having me, Zivko. Appreciate it.